Welcome to the Deep Dive. Today we're diving into E2E Networks Ltd,
E2E Networks Ltd. Okay.
a publicly listed company on the National Stock Exchange of India.
Got it.
So you want to kind of get a handle on this company,
Yeah.
and you've provided us with, well, a lot.
A lot of material, yeah.
Their annual report for the fiscal year ending March 31st, 2024.
Okay.
Some investor presentations and even notes from their latest earnings call.
Oh, wow.
So we've got like a 360-degree view of this company.
Okay, great. Let's get started.
So let's dive in. First things first. India's cloud computing market.
All right.
We need to set the stage here, right?
Yeah, absolutely.
The infrastructure as a service market, the IaaS market.
IaaS?
In India, it's projected to reach almost $12.5 billion by 2029.
Wow, that's significant.
That's huge. And that's a 25% annual growth rate.
Yeah, a big growth rate.
So what's fueling this incredible growth?
Well, I think several factors are contributing to this boom.
Yeah.
One is the increasing adoption of digital technologies. By businesses of all sizes.
Yeah.
You know, everything from like, you think about online shopping to healthcare, everything's moving online.
Yeah.
This creates a huge amount of demand for data storage.
Processing power, all those things.
Yeah, processing power, and of course those other cloud services.
It really is like the whole world is moving to the cloud.
Exactly. And India, with its young population, its burgeoning tech sector,
Yeah.
is really at the forefront of this digital revolution.
So this massive growth also means that E2E Networks faces really stiff competition.
Right. Yes.
I mean, we're talking about global giants
Yeah.
like Amazon Web Services,
Of course.
Microsoft Azure, and local players too,
Yeah.
vying for a piece of the pie.
Right.
So how does E2E plan to stand out in this crowded market?
Yeah, that's a good question.
What makes them special?
I think that's where their strategic focus on data security and compliance comes in. They've really kind of carved out a niche by offering, those high quality, reliable cloud services tailored to the specific needs of, Indian businesses, right?
Yeah.
With the particular emphasis on data protection.
It's like they're building a digital fortress
Yeah,
to protect their clients' data.
exactly.
Which is like increasingly important in this world filled with cyber threats.
Oh, absolutely. Yeah.
So this focus on security, that's like their secret weapon.
It's a key differentiator for them.
Yeah.
That's for sure.
They're also making some strategic moves to tap into the explosive growth of artificial intelligence,
That's right.
generative AI,
Yes.
which is projected to reach a market size of $1.3 trillion
1.3 trillion.
in the coming years.
That's incredible.
Trillion with a T,
Wow.
not a typo.
Yeah.
So they're not just like providing cloud infrastructure. They're actually positioning themselves at the forefront of like AI innovation in India.
That's exactly right. They offer this kind of comprehensive suite of cloud services, like dedicated servers. We've got graphics processing units, object storage, content delivery networks, and even, continuous data protection backups.
So like everything. They do it all.
It's like a one-stop shop,
Yeah.
for all things cloud.
Catering to businesses of all sizes.
Exactly. So let's zoom in a little bit on their business model.
Okay.
How do they actually make money?
Yeah. How do they make money?
Yeah.
What are their revenue streams?
Well, their primary revenue stream comes from providing that cloud infrastructure and related services, right?
Okay.
And they charge clients based on usage, similar to a pay-as-you-go model.
Okay.
Like, think about it like paying for electricity. You only pay for what you use.
Right.
So the more businesses rely on their cloud services, the more revenue they generate.
It's a pretty simple model.
It is.
Makes sense.
And as the demand for cloud computing continues to just soar in India, E2E Networks is in a good position to capture a larger slice of this pie.
Yeah, get a bigger piece of the pie as it gets bigger.
Exactly.
So it's not just about capturing market share though, right?
No.
It's about delivering strong financial performance.
Absolutely.
So what are the numbers saying?
Well, their financials reveal a compelling story, I would say.
Okay.
In the last fiscal year, their revenue skyrocketed to over 9,446 INR lakhs.
9,446 INR lakhs. That's
That's a lot.
a lot.
Over 114 million US dollars.
Okay.
Just to give you a sense.
That's a lot of money.
And their net profit more than doubled compared to the previous year.
So they're killing it
That's impressive growth.
by any measure.
Absolutely.
But hold on, their annual report mentions increased debt levels.
Right. Yes.
Doesn't that like raise some concerns?
Well,
about their financial stability.
it's a valid point.
Yeah.
Their debt-to-equity ratio has increased, which, essentially means they're using more borrowed money to finance their growth.
Yeah, that's always a little bit risky.
And this can be a risky strategy, especially if their earnings don't keep pace.
Yeah, if they don't grow fast enough to pay back the debt.
Exactly, with their debt obligations.
So it's kind of a gamble.
Yeah, it's a classic growth story, I'd say,
Yeah.
with its inherent, risks and rewards.
Yeah.
Yeah.
So what are some of the big challenges they face
Okay.
as they try to, scale their business,
Yeah.
navigate this crazy industry?
Well, one of the biggest challenges, I think, is keeping pace with the speed of technological advancements,
It's moving so fast.
especially in fields like AI, machine learning,
Yeah.
and cybersecurity. Imagine trying to drink from a fire hose.
That's a good analogy.
That's what it's like,
Yeah.
trying to keep up with this daily deluge of new technologies and updates.
Overwhelming.
Yeah.
How can they possibly stay ahead of the curve?
Right.
When the curve is constantly changing?
It requires significant investment in research and development, attracting top talent, retaining that talent,
Yeah.
and having a culture of continuous learning and adaptation.
They also have to deal with the whole government regulations thing,
Oh, of course, yes.
which can change all the time
Yeah, that's a big one.
and impact their operations.
Absolutely.
Yeah, regulations are a real wild card.
They can be, especially in a sector as dynamic as technology.
Exactly.
And these regulatory changes, they can create so much uncertainty, add a lot of complexity to their operations, impacting everything from data privacy to taxation.
Yeah.
It's a lot to juggle.
It's like walking a tightrope.
It is.
They've got to balance rapid growth with being smart about their money
And financial prudence.
and navigate this complex world of regulations.
Exactly.
And then on top of all of that, you've got the competition.
And the competition is fierce.
Global giants with those deep pockets.
Yeah.
Agile local players,
Right.
all fighting for market share.
Exactly.
Sound like a tough business.
It is.
But what are some of the opportunities
Okay.
that could propel them to even greater success?
Yeah. Well, I think one of the biggest opportunities is, again, that increasing demand for data security and compliance solutions.
Okay. Yeah, that makes sense.
As businesses become more reliant on cloud computing, they're also becoming more aware of the risks associated with data breaches and cyber attacks. And E2E networks, with their focus on security as a core differentiator, is in a good position to capitalize on this.
It's like they're offering peace of mind
Exactly.
in a world where data security is everything.
Oh, absolutely.
Yeah.
And as we discussed earlier, the rise of generative AI, that's another massive opportunity.
Right.
E2E Networks is making those moves to tap into this explosive growth
Yeah.
by offering AI-powered solutions and infrastructure tailored to the needs of businesses that are looking to leverage the power of AI.
So they're not just riding the wave. They're trying to be like a driving force in the AI wave.
Exactly. They want to be a leader in AI innovation in India.
Yeah.
And they're doing this by building those strategic partnerships with leading technology providers
All right.
to offer those kind of integrated solutions. That's a smart move.
Yeah.
Because it allows them to leverage the expertise and the reach of other players in the ecosystem.
They're playing the game.
They are.
It sounds like opportunities and challenges. It's a mixed bag.
It's a complex tapestry, I would say.
Yeah.
But ultimately, their success hinges on their financial performance.
Right. It all comes down to the numbers.
It does.
So what are their latest quarterly results showing?
Okay, let's dive into those numbers.
Let's break it down.
So their latest quarterly report, it reveals some pretty strong year-over-year revenue growth,
Okay.
driven by strong performance across all their key segments.
Like what kind of segments are we talking about?
Talking dedicated servers, cloud hosting, and those managed services.
Okay, so like a pretty good mix.
Yeah, it suggests they're not reliant on any single product or service.
That's good.
It's like having a diversified portfolio. You're not putting all your eggs in one basket.
Right, reducing the dependence on any one revenue stream.
Exactly.
That's smart. But what about the bottom line?
Right.
Are they actually making money?
Yeah, their profitability metrics are showing positive trends.
Okay.
Their gross profit margin, for example,
Gross profit margin. Okay.
which essentially measures the profit they make on each dollar of revenue after accounting for direct costs.
Right.
That remains pretty healthy.
That's good.
This indicates efficient management, I'd say, of their cost of goods sold.
So they're keeping costs under control.
Yes.
while still maintaining a healthy profit margin.
That's what you want to see.
That's good. But what about all those other expenses, like salaries and marketing and R&D?
Right.
How do those impact their overall profitability?
That's where the operating profit margin comes in.
Okay.
This metric takes all those into account.
All the other expenses.
All of those other expenses. And guess what? It's also showing improvement.
So things are looking up.
They are.
So as their revenue grows, more of that growth is actually flowing to their bottom line.
Exactly.
That's good for investors.
Absolutely.
Okay, let's switch gears a little bit.
Okay.
Let's zoom in on the balance sheet.
Okay, the balance sheet.
What can you tell us about their financial health, just based on,
Yeah.
their assets, their liabilities, and equity?
Well, their balance sheet for the fiscal year ending March 31, 2024, shows a significant portion of their assets are allocated to property, plant, and equipment.
Property, plant, and equipment.
Which makes sense.
Yeah, they've got all those data centers and servers.
Considering their heavy investment in data center infrastructure.
That's like the foundation of their business.
It is, yeah. Those servers, data centers, all those physical assets.
All the stuff that powers their cloud services.
Absolutely. They've also made substantial investments in intangible assets.
Intangible assets, like what?
Things like IP addresses.
IP addresses, okay.
Which are, crucial for their cloud computing services. Think of IP addresses like digital real estate.
Okay.
Their value can fluctuate.
Based on demand.
Significantly, yeah, based on market demand.
It's fascinating.
It is.
To think about these intangible assets, like IP addresses.
Yeah.
Having such a tangible impact.
Right.
On a company's value.
Absolutely. Now let's move to the liability side of their balance sheet.
Okay.
Here we see a mix of short-term and long-term debt.
Okay.
Which I think indicates a pretty balanced approach to financing their growth.
So they're not putting all their eggs in one basket again?
They're not over-reliant on short-term debt, which can be volatile.
Right.
But they also don't have an excessive amount of long-term debt, burdening them.
So they're finding that middle ground.
They are, yeah.
That's it.
It gives them more flexibility to maneuver and respond to those changing market conditions.
So overall, are they stable?
I'd say their equity section reveals a healthy mix of share capital, reserves, and retained earnings.
Okay.
Indicating a strong financial foundation.
Solid. Like a bedrock.
It is, yeah. A solid bedrock supporting their growth ambitions.
All right. So their balance sheet tells a story of strategic investments.
Yeah.
Prudent financial management. And a good, solid foundation for future growth.
And their cash flow statement further reinforces this picture of financial health.
Okay, so let's talk about cash flow.
All right.
Because that's often considered like the lifeblood of a business.
No, it is.
How are they doing in that department?
Well, their cash flow statement, it paints a pretty positive picture.
Okay, good.
They're generating ample cash from their operations, which means their core business activities are bringing in enough money to cover their expenses.
That's what you want to see.
Invest in growth, and even potentially return value to shareholders.
That's the sign of a truly sustainable business.
It is.
One that can generate cash just from its core operations.
Exactly.
But what about their investments in growth?
Yeah.
Are they spending their money wisely?
Well, their cash flow from investing activities reveals ongoing investments in infrastructure and technology.
Makes sense.
Which, aligns with their strategic focus on expanding that data center capacity, enhancing those service offerings.
So they're using their cash to build a bigger and better engine.
Exactly.
For future growth.
For future growth.
That's smart.
And their cash flow from financing activities shows a mix of debt and equity financing.
Okay.
Which indicates, again, a balanced approach.
They're not relying too much on debt.
To capital management, exactly.
Okay.
They're not over-reliant on any single source of funding.
Which reduces their risk?
Which reduces their financial risk, yes.
Okay.
And gives them more flexibility.
Okay, and we've covered a lot.
We have.
Balance sheet, profit and loss statement, cash flow statement. What's the next piece of this puzzle?
Let's move on to some key financial ratios.
Ratios. I love ratios.
Yeah.
They can tell us so much.
They can.
About a company's financial health.
Absolutely.
Where should we start?
Let's start with their debt-to-equity ratio.
Debt-to-equity, okay.
Which measures, how much debt they're using to finance their assets.
Right.
Think of it like a balancing act.
Okay.
Finding the right mix of debt and equity to optimize their capital structure.
And what's their ratio looking like?
Well, currently it's within a healthy range.
Good.
which means they're not over-leveraged.
That's good.
They have a manageable debt burden,
Okay.
which gives them, again, more flexibility to maneuver, weather potential economic storms.
So they're not in too much trouble.
Not yet, no.
That's good. Now, what about return on equity?
Return on equity, okay.
What is that?
It measures how effectively they're using their shareholders' equity to generate profits.
So it's like a report card.
Yeah, like a report card for the management team.
Okay.
Showing how well they're using the resources entrusted to them.
And how are they doing? What's their grade?
I'd give them a pretty good grade.
Okay.
Their return on equity is consistently high,
Okay.
reflecting their ability to generate strong returns for their shareholders.
That makes investors happy.
It does. This strong performance is very attractive to investors.
Makes sense.
And it helps fuel their continued growth.
So they're using their shareholders' money wisely,
Yes.
generating those solid returns.
That's a win-win.
A win-win.
Yeah.
Okay. Last ratio, I promise.
Right.
Current ratio.
Current ratio.
What does that tell us?
This measures their short-term liquidity
Okay.
or their ability to meet their short-term obligations. Think of it like a financial health check,
Okay.
making sure they have enough cash on hand to pay the bills.
Yeah, she's king.
It is.
So how's their current ratio looking?
Their current ratio is comfortably above the industry average,
Good.
which indicates a strong liquidity position. So they're in a good position to handle any unexpected expenses or short-term fluctuations in their cash flow.
They've got a cushion.
They do.
Okay, so we've analyzed a lot of numbers.
We have.
Let's zoom out.
Okay.
Big picture.
Yeah.
What's the takeaway?
Yeah.
Are they on the right track?
I think the numbers tell a positive story.
Good.
Their healthy debt-to-equity ratio, high return on equity,
Mm-hmm.
and strong current ratio
Mm.
all point to a company that's financially sound
Okay.
and well-managed.
They're checking all the boxes.
They're generating strong profits, they're using their capital efficiently, and maintaining a healthy cash position.
Those are all good signs.
They are.
They're on a good path for sustainable growth.
Exactly.
However,
There's always a however.
their debt service and interest coverage ratios, those have slightly decreased
Okay, because of the debt.
due to their increased borrowings to
Mhm.
fuel growth.
So they're taking on more debt
Yeah,
to grow faster.
exactly.
But it's not at an alarming level yet.
Not yet. Okay. It's about finding that balance,
Mm.
between using debt strategically to accelerate growth while also ensuring they can comfortably manage their debt obligations.
It's a balancing act.
It is.
But so far, so good.
As far, so good.
Okay, so to get the complete picture, though, we need to really dig into their recent quarterly results.
Absolutely. Their second quarter results.
Okay.
For the fiscal year 2024-25,
Uh-huh.
those provide some valuable insights into their current trajectory.
Okay, let's take a closer look at those quarterly numbers.
Okay.
What were some of the highlights?
Well, the headline numbers, they're pretty impressive.
Okay, good.
They reported strong year-over-year revenue growth,
Right.
exceeding analyst expectations.
That's always good.
This continued growth momentum is a positive sign,
Okay.
suggesting that their strategic initiatives are working.
Okay, so they're on a roll.
It seems like they are, but revenue growth is only part of the story.
Right. We need to see the profits, too.
What about the profitability?
Yeah.
Well, they also delivered significant profit growth during the quarter,
Okay.
demonstrating their ability to translate that revenue growth into actual bottom line results.
So they're not just growing, they're growing profitably.
Exactly. That's what we want to see.
That's the recipe for success.
It is.
But what were some of the drivers behind this strong performance?
One key highlight is the robust growth of their data center business,
Data center business, okay.
driven by strong demand from both existing and new clients.
So they're meeting a need in the market.
They are. It seems like their investments in data center infrastructure are paying off.
That's good. So it's not just about the physical infrastructure, though, right?
Yeah.
What about those cloud-based solutions?
Yeah.
Are those gaining any traction?
Absolutely. Another noteworthy development is the increasing adoption of their cloud-based solutions,
Right?
particularly their IS offerings.
Like,
Clients are embracing, the flexibility and scalability of cloud computing.
and E2E is well-positioned to capitalize on this trend.
They're riding the cloud wave.
They are. But this wave isn't without its challenges.
Okay, what kind of challenges? What are we talking about here?
Well, they highlighted the rising cost of energy as a key challenge.
Energy, yeah, that's a problem for a lot of businesses these days.
It is. It's a significant input cost for data center operators.
Yeah, you got to keep those servers running
You do.
24/7.
Exactly. And it can really put pressure on their profit margins.
So how are they dealing with that?
Well, they're implementing energy efficiency measures
Okay.
and exploring renewable energy sources
Right.
to mitigate these cost pressures. It's a proactive approach.
Good. So they're not just sitting back and doing nothing.
No, they're actively trying to find
They're
solutions.
on top of it.
They are. And then beyond the energy costs, there's always, that intense competition in the cloud computing market.
Yeah, the competition is always there.
It is. They're up against those global giants with vast resources,
Mm.
as well as, the nimble local players
Yeah.
who are quick to adapt.
So it's a constant battle
It is
for market share.
for market share.
So what's their strategy? How are they going to win?
Well, they're investing in innovation and customer experience initiatives to try and stay ahead of the curve.
So it's not enough to just have a good product.
No,
They have to make the customers happy too.
they understand that to win in this market, they need to offer not just competitive pricing, but also those cutting-edge solutions and exceptional customer service.
So it's about the whole package.
It is.
The whole experience.
It's not just about building a better mousetrap.
Yeah.
It's about building a mousetrap that customers love.
And keep coming back for it.
And keep coming back for. Exactly. And they're also focusing on a couple of key growth areas that could give them an edge.
Oh, like what?
Things like data security and edge computing.
Okay, so why are those so important?
Well, as businesses become increasingly reliant on cloud computing, data security becomes paramount.
Yeah, that's a big one.
And E2E Networks recognizes this
Hmm.
and is investing in robust security measures
Okay.
and compliance certifications to address those concerns.
So they're building that digital fortress
They are.
to protect their clients' most valuable assets.
Exactly. And edge computing is becoming increasingly relevant
Edge computing.
for applications that require low latency.
A latency of
Think
one.
like Internet of Things devices, real-time analytics.
Okay, things that need to happen fast.
Think self-driving cars, remote surgery.
Oh, wow. Yeah.
Those applications can't afford any lag time.
Yeah, that's critical.
E2E Networks is strategically positioning itself in this market by expanding its infrastructure and developing those edge-specific solutions.
So they're thinking ahead
They are.
and positioning themselves for the future.
For the future of cloud computing.
It sounds like they have a good plan.
I'd say their overall approach suggests a company that is not only financially sound, but also strategically savvy. They're paying attention to those market trends, anticipating those customer needs, and proactively addressing those challenges.
It's like they have their finger on the pulse
They do,
of
exactly.
the industry.
And they're not afraid to invest in their future.
Speaking of investments, let's talk about that.
Okay.
How are they using the funds they've raised?
Well, their primary use of funds is to expand their infrastructure,
Okay.
particularly their data center footprint.
Data centers make sense.
They're investing in new data center facilities, expanding that server capacity, and upgrading their network infrastructure.
Laying the groundwork for massive growth.
Exactly. And they're not just focused on bricks and mortar.
Oh, so it's not just about the buildings.
They're also investing heavily in research and development to create new products and services,
Okay.
particularly in cloud computing, artificial intelligence, and cybersecurity.
Investing in the future.
So they're investing in both the physical and intellectual infrastructure.
The brains and the brawn.
Exactly.
Hmm.
And they're also using funds for strategic acquisitions,
Acquisitions. Okay.
which can help them expand their market reach, gain access to new technologies, acquire top talent.
So it's like they're playing chess.
It is.
They're making these strategic moves.
Strategically positioning their pieces for long-term success.
Smart.
And lastly, they're using funds to strengthen their balance sheet.
Okay.
Reduce debt levels, build up those cash reserves,
Mm-hmm.
and just improve their overall financial stability.
Shoring up their defenses.
Exactly.
So they're not just focused on growth.
No,
They're also making sure they're prepared for any bumps in the road
they want to be able to weather any storms.
that come their way.
Exactly. And all of these investments are carefully considered to ensure they align with their overall growth strategy and create long-term value for those shareholders.
It sounds like they have a good plan,
They do.
and they're executing it well.
They are.
But let's not forget about the people,
Right.
the human element.
The human element.
Who's actually running the show?
Let's turn our attention to their promoters and management team.
Okay, let's meet the team. So who are these masterminds?
Okay, so at the helm, you have Tarun Dua.
Turnua, okay.
the managing director.
BMD.
He's a seasoned entrepreneur, deep understanding of the technology industry.
So he knows what he's doing.
His vision and leadership have been really instrumental in shaping the company's growth.
A real visionary.
I think so, yeah. But it's rarely a one-man show.
Right, it takes a team.
Absolutely. He's assembled a talented and experienced management team,
Okay.
each member a specialist in their respective fields.
That's good.
And they've got a proven track record. I mean, they've navigated the company through challenging times and delivered impressive results.
A real dream team.
I think so, yeah.
Hmm.
But even with a great team, a solid strategy, there are always risks.
Of course, every business has risks.
Hmm?
What are some of the big ones for E2E?
Well, one of the biggest risks in this industry is the rapid pace of technological advancements.
Things change so fast.
I know if they fall behind, their services could become obsolete.
Yeah.
And they lose their competitive edge.
So they have to constantly be innovating.
Absolutely. It's like a constant race.
Yeah, to stay ahead of the curve.
To stay ahead of the curve, exactly. And on top of those technological risks, you've got potential regulatory changes.
Oh yeah, the regulations. We talked about that.
They can create uncertainty, disrupt operations.
Yeah, it's tough to predict what's going to happen with regulations.
It is. And of course, there's always the risk of an economic downturn,
That's always a possibility.
which can impact business spending, reduce demand for their services.
It's like a triple whammy of risks. Yeah. Technological, regulatory, and economic.
Yeah.
How do they deal with all of that?
Well, they've highlighted several risk mitigation strategies
Okay.
in their annual report.
Okay, so they're thinking about these risks.
They are, yeah. One key strategy is their focus on research and development,
Makes sense.
which helps them stay ahead.
Right. Stay ahead of those technological advancements.
They're also actively engaging with industry bodies and regulators
To stay informed.
to stay informed, yeah, about potential regulatory changes.
Yeah.
And to have a voice in shaping those changes.
So they're not just sitting back and waiting to see what happens.
No, they're being proactive, trying to shape the future of the industry.
I like that. So what about the economic risks? How are they dealing with those?
Well, they're diversifying their customer base.
Okay, so not putting all their eggs in one basket again.
Exactly, across various industries.
Right.
Reducing their dependence on any single sector.
So if one sector takes a hit, they're not completely sunk.
Exactly. But even with all these strategies in place, there's always some level of uncertainty.
Of course, that's just the nature of business.
It is.
So how do investors evaluate a company like this?
Well, they carefully evaluate the company's risk profile before making any investment decisions. And in the case of E2E Networks, their track record, strong management team, and their proactive approach to risk mitigation, it suggests they're well equipped to handle the challenges ahead.
Okay, so they seem to be doing all the right things.
They do, yeah. But let's talk valuation.
Okay, valuation. How
Yeah.
much is this company actually worth?
Right. Well, they're currently trading at a price-to-earnings ratio that's higher than the industry average.
Higher than average. So investors are willing to pay more for their shares.
They are. It suggests that investors are pretty optimistic.
Okay, but what's driving that optimism? What makes them think E2E is worth that premium?
Well, I think a few things. One, their strong track record of growth and profitability.
Yeah, they've been doing well.
Investors are betting on their ability to continue on this path.
Past performance is often a good indicator of future success.
It is, and they're also excited about their focus on those high-growth areas.
Like cloud computing and AI.
Exactly. Cloud computing, AI, cybersecurity.
Those are hot areas.
They are, yeah. It's like they're riding a wave of innovation that's sweeping the tech industry. And their strong management team, their good corporate governance practices, their commitment to ethical business practices, all of that adds to their appeal for investors.
So they're doing a lot of things right.
They are, yeah.
Okay, so let's talk about who actually owns E2E, their shareholding pattern.
Okay, shareholding pattern. Well, they've got a pretty diverse mix.
Like what kind of mix?
You've got promoters, institutional investors, venture capital firms,
Okay.
and individual investors.
So it's a good spread.
A healthy balance, yeah. Their promoters, led by Turundua, hold a significant stake,
Okay, so they have skin in the game.
which shows they believe in the company's future.
Yeah.
And it aligns their interests with other shareholders.
That's good for everyone.
It is, yeah. And the presence of those institutional investors, like those mutual funds, pension funds, that adds credibility,
Yeah.
stability to their shareholder base.
It's good to have those big players involved.
It is.
Shows they have confidence in the company.
And The fact that venture capital firms have also backed them,
Oh yeah, the venture capitalists.
providing not only capital, but also, valuable guidance, industry connections.
It's like having a team of experts in their corner.
It is. It
Yeah.
speaks volumes about their potential.
So it sounds like they have a lot of support
They do, yeah.
from a variety of investors.
I think all of these factors, their financial performance,